Okay, let's have a look at fundamental analysis of UTHR. We look at our value line report. What can we see here? Now, the recent price is not $119 at the moment, is $124. When we met at our club meeting last week, it was 110. Okay, it's moved up from our last meeting. And so let's have a look what we see here. So we see information from 2000. As I said, it went public in 1999. And we can see that sales level was steadily growing during that time. And we can see that during the 2008, it was still moving up. And for the last few years, we can see $7, $10, $13, $18, 22, 27, 32, 37. This year they're planning, then 41 and 61. So we can see per share the sales level expected to be growing, and it was growing before. It has been growing before. Now, if we look at cash flow, it's positive cash flow, which is pretty good. Now, earnings. What we can see in 2009, the earnings were 35 cents, so it's dropped from $1 to 35 cents. And then we can see the steady growth. Here it's kind of went back up and moved quite nicely. So $1.70, 3.60, 5.70, 3.20, 7.70, quite big jump here as well. 10.40. This year they are planning to have $12.10. Please write it down for you that the current price is about $120, $24, right? And the uh, profit which they're going to make this year is $12. Okay, and we can see that they are planning to have next year $13 and then $14 in profit. But if we look, interestingly enough, if we look at the general sales level, we can see that sale per company. Okay, the interesting point here, which you have to notice, that if we see that sales level is growing, but the profit it slides down. So we can see that value line predicts that if at the moment the profit is 532 million, this year is going to be 600 million, then 630 million, but then for whatever reason it's going to be 580. Now the profit is going to go down. Now we need to analyze it further and understand why it is happening. Now there could be few reasons for that. First reasons, it might be some product, okay, which at the moment is still patent, okay, and protected by a patent. The patent will expire, and in this case they will have to sell it cheaper because there are other companies which are going to sell a similar type of generic already product on the line, and there would be a high competition level, so they will have to reduce the price for this product. Maybe that's the reason why they're showing so decrease in profit. Now, another reason which could be as well here, that some products are approaching the stage, development stage, where they need to spend a lot of money. Okay, and they can predict it because they know on what level right now and what pipeline stage this product right now. So, and they can expect that at this particular year in 2019 and 2020, they might have a higher spending level for research and development. So, and that's why the profit will go down. But at the same time, we can see that earnings per share, they still expect to be higher. So it means that they are planning to buy back their shares, so and reduce the amount of shares. So for you as individual investors, it's pretty good because you know that your particular share will give you higher profit in the future as well. Now, as I mentioned before, like the growth rate, if we look at this, earnings growth was 56% for the last 5 years, and the sales level was 31%. So it's perfect. But we can see that they're going to grow in a much lower stage in the future. So rate, we see 14% sales and 12% earnings growth. So that's why probably the company moved from $190 to $120. So it's practically lost 40% of its value based on those predictions. Okay. Now the capitalization of this company, we can see that's 5.3 billion, and we can see the total debt is only 5 million. So it's practically no debt, like no long-term debt doesn't exist. So it's pretty good. Now, if we look at the return on capital employed, it's 30%, on share equity 30%. So it's pretty good. Net profit margin is 36%, pretty high, and operation margin is 53%. So it's pretty high as well. Another, let's have a look at our current position. So current assets and current liabilities. Now, usually it's division long-term debt and short-term debt. Current debt is whatever can be convert to cash during next 12 months. So current assets, it means that $1.3 billion here. It's practically, you can consider it to be cash. And liabilities, they have about 357 million. So they have approximately $950 million in cash. So which is pretty good for this particular company. And if the working capital is about 875 million, so it means that they can live for 1 year and paying cash which they have right now available for them. So it's pretty good one. So if we read here, we can see that they spend about 10% for research and development. Um, now, now we can see also that they have several products in their pipeline, and also what they do, they uh, going because at the moment they're working with one particular disease, right? With hypertension, lung hypertension. But at the moment they're going to oncology as well, which is pretty good. So they're expanding their not only products but also the areas where they work, which is telling us that this company has a good potential. So please read more information about this company, okay, and what we can expect from it, and based on value line report. Okay, long-term investors should, however, consider these natural rank shares. Earnings should advance quite nicely in the coming years. So that's the value line kind of prediction. Now, no cash dividends paying, so that's a disadvantage. So we prefer to have companies which paying at least some kind of dividends. Why do you need it? If you were wrong, for example, and the company, instead of going up, start going down, okay, and for whatever reason you don't want to sell covered calls, at least you will get some dividends, which is nice to have. Okay, so let's that particular company. Now, when we put all these numbers into our spreadsheet, we come up with this information. So in total, it gives you 41 points in quality. So it's a good quality company. And if we look at price, it gives us 48. So practically in the max. Okay, the earnings just passed 26 of July, so last week, and the earnings were good. So after that, it's moved nearly 10% already after this earnings up. So whoever got this company after our last club meeting, so they already made 10% on the growth. Okay, so that's the UTHR company itself.